Welcome to the deep dive. Our goal, as always, is simple. We cut through the noise, find those key nuggets of knowledge from your sources, and bring them right to you.
Glad to be here.
So today we're unpacking some pretty significant financial and economic developments. We've got corporate shifts here in Malaysia, global trade stuff, policy changes, lots happening.
Absolutely. It's a busy landscape.
Let's start right here then. Malaysia's corporate scene. What's catching your eye in, say, the banking sector?
Okay, yeah. Banking. We're seeing Ambank, for instance. They're really pivoting their lending strategy, moving more towards SMEs.
SMEs. Why the shift?
Well, it looks like a direct response to the recent rate cuts. Those cuts are squeezing their traditional lending margins, so they need to find healthier returns. SMEs often offer that potential.
Right. Makes sense. Finding profit elsewhere.
Exactly. And then you've got CIMB. They're seeing slower loan growth overall. That sort of hints at a more cautious business sentiment, Suggests maybe a tougher operating environment for everyone.
Caution in the air. Okay. Beyond banking, some major corporate moves are happening too, right? MMC Port.
Oh, yeah, that's a big one. They're planning Malaysia's largest IPO since, 2012, looking to raise over $1.5 billion US.
Wow. That's huge.
It is, and it's attracting serious global attention. Really underscores, I think, investor confidence in Malaysia's infrastructure potential.
Interesting. And Insas, they're moving into ICT.
That's right. Diversifying. They're becoming the largest shareholder in Microlink Solutions. It reflects that, unstoppable drive towards digital transformation, hunting for those stable, maybe recurring income streams.
So big growth plays. But are there flip sides, other shifts happening?
Well, yes.
Yeah.
You also see things like the controlling family of Apex Healthcare, possibly looking to sell their big stake, maybe to a foreign buyer.
What does that usually signal?
Could be a few things. Generational transition, maybe, or just a strategic realignment within that specific industry. Happens all the time.
Okay, but it's definitely not all smooth sailing out there. Some companies are facing pretty serious headwinds, aren't they?
No, definitely not. Look at Arica Corporation. They faced that huge RM 1.07 billion contract termination for the Pan-Borneo Highway. Seems like funding issues.
Ouch. That's a major blow for an infrastructure project.
It is. And it's a cautionary tale about project financing risks. Then you have CTOS Digital expecting earnings to decline further, leading to downgraded guidance.
Not great.
And Farmaniaga, they're under PN17 status that signals financial distress, basically. They're working hard to recapitalize, with Jaco Group stepping in as a key investor.
Right, trying to turn things around.
And even Tenaga National, our big utility company, is grappling with potentially another RM 8 billion in tax assessments.
Wow, RM 8 billion, that's significant, even for them.
It really is. It highlights the kind of fiscal scrutiny even major stable entities are under. That can have ripple effects.
Okay, let's shift to something potentially more positive. Infrastructure growth. Johor Bahru, the autonomous rapid transit system. RM 7 billion project, 3 consortiums competing.
Yes, that's heating up. And it's absolutely vital because it connects directly with the upcoming Singapore rapid transit system.
The Singapore link. Why is that connection so crucial?
Well, think about it. The JBRT isn't just about moving people around Johor Bahru. It's a critical piece of cross-border integration. You've got the Johor-Singapore Special Economic Zone already attracting billions in investment.
Right, that SEZ is a big deal.
Exactly. So this transit link is essential to actually maximize that potential. Easier movement, easier trade. It really signals that regional connectivity is a top priority for unlocking growth.
Makes sense. Connects the dots, literally. Okay, zooming out slightly to Malaysia's broader economy. Bank Negara. They slightly revised the 2025 growth forecast down 4.0 to 4.8%.
Yeah, slight tweak downwards. But importantly, they're still highlighting the resilience of domestic demand. That's acting as a crucial shock absorber against, global wobbles.
And inflation.
The outlook there is cooler, which is good news. Gives consumers a bit more breathing room. So it's a nuanced picture, not necessarily a red flag on the downgrade.
Okay. Policy front now. Some big changes announced, right? Foreign workers.
Huge changes. The Home Ministry confirmed MYGI's contract for permit renewals, not extended.
Oh, so who handles it now?
Bestinet becomes exclusive for the EPS applications. That's the electronic system.
Yeah.
Centralizes things.
And levies might go up too.
Could rise by RM 300 to RM 500. That will certainly impact businesses relying on foreign labor.
Definitely adds to costs. What else on policy? Vaping.
Ministry of Health is planning a full ban on open system vape
A
products.
full ban. Why?
They found widespread detection of illicit substances in them.
Hmm.
So it's a strong public health move, though obviously facing industry pushback.
Right. Okay, what about wages and trade? Any updates?
Good news on wages, sort of.
Hmm.
Malaysia's median monthly wage hit RM 3,000. That's positive progress.
Right.
But a significant income gap persists. That's still a key challenge for, equitable growth.
Always the gap. And palm oil.
Exports expect a recovery in the second half of 2025. That's despite challenges, like India hiking import taxes. Shows the commodities' underlying global demand is still there.
Okay, let's really zoom out now. Global currents. US and EU, they struck a tariff deal.
Yeah, 15% tariff deal, averted a potentially nasty trade war, which is good for stability.
Phew. And US-China.
Talks are ongoing, aiming for a 90-day extension to the tariff truce. Could possibly pave the way for a Trump-Xi meeting down the line. But China's industrial profits are actually declining, partly due to internal price wars, partly those existing U.S. tariffs still biting. Shows the real economic pain these disputes cause.
Interesting investor behavior, too, shifting out of U.S. treasuries.
Yeah, that's fascinating. Moving from supposedly safe treasuries into corporate debt. It suggests rising concern over U.S. fiscal deficits. Maybe treasuries aren't seen as quite the safe haven they once were compared to some corporate bonds.
A recalibration of safe, maybe?
Exactly. Also, copper prices are up ahead of U.S. tariff deadlines. And the Fed expected to hold rates this week, but everyone's really looking towards September for a potential cut.
Markets anticipating that cut. Got it. And finally, commodities and environment. OPEC plus
Poised to increase oil production further. That could ease prices a bit more for consumers globally.
Good news for drivers, maybe. Environmentally, though.
Less good news there. Southeast Asia faces a rising risk of severe haze this year. More forest clearing fires, partly driven by high prices for things like, palm oil.
Yeah, that connection again. Commodity markets and environmental impact.
It's a direct link, a stark reminder of the need for more sustainable practices.
So wrapping this all up, we've covered a lot. A really dynamic, interconnected global financial picture today. From Malaysian companies pivoting strategies to these big global trade tensions and policy shifts.
It really shows how everything's linked. Local decisions impacting global flows, and vice versa.
Absolutely. And for you, listening in, understanding these shifts is, it's key. So here's a thought to leave you with. As central banks everywhere keep doing this delicate dance with inflation and growth and trade relations remain, let's say, complex, how will these big picture dynamics specifically shape the cost of living and maybe your investment opportunities right here in your local market over the next year or so?
Something to really mull over.
Definitely. Until next time, keep diving deep.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.